Well, the U.S. economy, I still find pretty mixed. You have strength in upper income spending, anything related to AI spend, which is still pretty robust. On the other side, we see weakness on with lower to middle income spending, existing home sales, manufacturing, global trade. We're seeing a slowdown in the pace of hiring. So mixed bag here, and seemingly a mixed bag overseas as well. So overall, very uneven. And I think that just adds to the global confusion here on what's going on.
Welcome to Discourse with Christian. I'm your host, Christian White, and today's guest is Peter Boockvar, Chief Investment Officer at Bleakley Financial Group. He's also the editor of the Boock Report on Substack and a CNBC contributor. Peter, thanks so much for carving out a little bit of time today to give us your latest thoughts on the market and such.
Thanks for having me on.
Would love to start off asking you what's your current take on the global economy and financial markets, given the time we have.
Well, the U.S. economy, I still find pretty mixed. You have strength in upper income spending, anything related to AI spend, which is still pretty robust, and still a lot of government spending, as seen with the budget deficit relative to GDP. But we'll obviously see with the budget negotiations what the extent of that government spending trajectory will still be on. On the other side, we see weakness on with lower to middle income spending, existing home sales, manufacturing, global trade. We're seeing a slowdown in the pace of hiring. So mixed bag here, and seemingly a mixed bag overseas as well. In Europe, you have weakness in Germany and France, even though there's hopes that Germany is going to jumpstart their economy with a lot of fiscal spending. But then you have strength in Greece and Spain and even Italy, and Asia mixed too, with softness in parts of China, strength in other parts of China, and then a mixed bag throughout the region. So overall, very uneven, and I think that just adds to the global confusion here on what's going on.
And as it relates to potential geopolitical events that might impact markets, things of that nature that are even concurrently going on, could you share your thoughts?
Well, economically, I think that the trade negotiations and tariffs are the most obviously the most relevant thing, particularly the negotiations with China and the U.S. Is there going to be a deal? No deal? What would a deal even look like? The current negotiations, what are they even talking about other than rare earths and ethane and chip sales? We're just going to see a resumption in those transactions and trade, or is there something broader here? I think overall, though, we're still going to be left with higher tariff rates than what we entered the year with, and I think that that'll be a back half story of the year.
And as it relates to kind of the overall scene, how do you see things shaking out more or less as it relates to over in Europe, particularly with the Russian-Ukrainian conflict going on in the markets?
Well, we're already 3 years into it, so I don't know if it's shown to be not really market moving. There hasn't really been any disruption in the supply of energy or agriculture. So from a market perspective, it hasn't been that sort of relevant, even though economically it's certainly and geopolitically for that region of the world, it's obviously a big deal, and it's been a tragedy for Ukraine. But where it goes from here and its impact on the broader economy and markets, probably more muted unless there's some serious disruption in the flow of natural gas and oil from Russia, which we'll have to see whether that happens or not. But 3 years in, it hasn't happened yet.
And as it relates to the dollar, its hegemony, BRICS, global capital flows, the bond market, if you could dispense your thoughts on those.
Well, the weakness in the dollar, I think, is certainly a sign of a global rethink of how much allocation they want to have to U.S. assets coming into the year, going back to, I think, 1950 with the highest sort of market cap of the U.S. relative to the rest of the world. And international investors were heavily loaded, particularly in Mag 7 stocks. So I think since the late January DeepSeek news, since the tariff war that we instigated, there's definitely been a rethink. And I think that's why the dollar is near the lowest level in a couple of years.
And then as it relates to the bond market, the Fed, if you care to share your current thoughts.
Well, I mean, rates are staying pretty elevated. I think that foreigners are not just rethinking their allocation to U.S. stocks; they're probably doing the same with corporate bonds and and Treasuries, because now if they're unhedged, they're taking a lot of currency risk and they're losing money if they were not hedged. On the other hand, we'll have to see what the Fed does. They're certainly not going to be cutting in June, but Powell could lay the groundwork for a few cuts in the back half of the year. But the bond market's already priced that in if you look at the Fed funds futures. To the extent to which he'll cut, I think he's focused heavily, of course, on the inflation stats. We'll see CPI tomorrow, PPI Thursday, and the trajectory of the unemployment rate. But anybody looking to the Fed thinking they're just going to save the day, yeah, they may cut, but that doesn't mean that rates stay low across the curve. Long rates may actually go up, just as they did after they cut 100 basis points. And even if they cut, I expect more rate tweaking than sharp rate cutting. So I don't even know if that's going to really matter in terms of its impact on the economy or the housing market if long rates end up going up and mortgage rates end up going up with rate cuts. So I know a lot of people think that just going to be the same old playbook and Fed's going to cut and everything's going to be fine, but I'm not as confident.
And then, and as it relates to the Trump administration, how much of what they are hoping to achieve and accomplish do you see them being able to effectuate, more or less?
In terms of what exactly?
Oh, in terms of policy, whether that's fiscal, et cetera.
Well, I do think they'll be successful in extending the tax cuts. What comes around that in terms of offsets and what will happen with government spending, we'll see. But I'm pretty confident those tax cuts are going to get extended. And we'll see probably about $1.5 trillion of spending cuts, which $150 billion a year is pretty nominal, considering we're spending $7 trillion a year. But I think more importantly, potentially the stimulus from excessive government spending, I think, is going to ebb. And that government spending over the last couple of years has been a major booster to economic growth, earnings, and corporate profit margins. So I actually think that the bill is going to be somewhat of maybe a little bit of a fiscal drag in certain aspects, but on the other hand, accelerated depreciation, expensing could be a positive for capital spending. So we'll see. There's a lot of moving parts. I'm not a fan of tariffs and the way that they've gone about this. So I expect an economic drag from that, but we don't even know what the tariff rates will end up being. Obviously, a portion of it's going through the court system. So that remains to be seen, too, on how that's going to get settled.
And as it relates to markets and things of that nature, what are some things that you feel perhaps retail investors or even institutional investors are currently overlooking?
Well, I think that the world's different today than it was as we entered the year. We have the tariffs. I think that the Mag 7 trade has sort of splintered. You certainly have some winners, but you have a few different losers. And I think the point of that is that as a group, you can't just rely on it to take the S&P higher. You're going to have to find other things to buy. International markets have way outperformed the U.S. markets. The dollar is weaker. And I don't think this is just a 1 quarter thing or 2 quarter thing. I think there's a major transition taking place in global markets in terms of leadership. So that's changed. I mentioned earlier the pace of hiring. I think that's slowing. So I just think that the market back at the highs here is just assuming everything is fine and never mind on tariffs. But I think the world has changed, and the S&P trading at 23 times earnings. I think that there are a lot of cheaper things than the S&P that investors should take a look at.
You've alluded to attention, particularly as it relates to investments, of course, migrating east and things of that nature. The Middle East and Asia comes to mind. Could you share perhaps some other data points that you're observing, or trends or investment theses?
Well, growth rates, I think over the next 10 years, you're going to find it more in Asia than anywhere else in the world. So there are plenty of good, we believe, investment opportunities in Asia, particularly Japan, Vietnam, Singapore, even some names that play on the Chinese consumer, which more on the tourism side. But I think after many years of U.S. dominance in terms of market performance, I think that's changed. So I think I think that's a good thing from an investing standpoint, because there's a whole world of opportunities that this opens up.
Now, I've heard some people mention on other shows that China could potentially be perhaps in the next decade or further out, the next financial hub, if you will. Do you have any comments as it relates to that and where you see things shifting in this multipolar world?
Well, they very well could be for that side of the world. But so will Singapore as well. But Hong Kong, Shanghai, yeah, they're going to be pretty important financial centers for that side of the world where half the world's population lives. We tend to think that everything revolves around the U.S. and the U.S. economy, but 75% of GDP growth, or I should say GDP, takes place outside the U.S. and 96% of the world's population lives outside the U.S. So the U.S. will always have a dominant place in the world. I just think that, as I said earlier, investors need to sort of widen their lens and realize that the world is realizing that they may not be able to rely on the U.S. To the extent that they once before did, particularly with the tariff war that we started with everybody, and that we're just maybe less reliant in terms of trade and so on.
Anything else that you feel doesn't receive enough attention, or perhaps something that keeps you up at night, Peter?
Nothing keeps me up at night, but I think that the investing playbook that works so well for the last decade plus, particularly the last 3 to 4 years post COVID, I think things have changed, and I don't think it's going to be easy as buy the top 7 stocks and U.S. dominance and exceptionalism and so on. We'll always be exceptional. We'll always be dominant in a way, but I think less so in terms of the transition I talked about when it comes to investing. And even economically, I mentioned Asia is probably going to be the fastest growing part of the world over the next 10 years. We can still benefit from that. Europe's going to benefit from that. But we're not going to be as dominant, I don't think, as the world sort of diversifies itself away from the U.S. into other things.
Well, Peter, I know we only had so much time. How can people learn more about you and get in touch with you and your firm?
Well, I write every day on Substack. You can type in my name. It's called the Boock Report, and writing on the economy and markets. And from a wealth management perspective, where I'm the CIO and a portfolio manager, they can go to our website, bleakley.com, to learn more about us.
Peter, thanks so much for making an appearance. Really appreciate you.
Thank you, Chris, for having me.
Quick ask. Over half of you who watch the show regularly haven't yet subscribed. If you've enjoyed the show, you're finding value in it, subscribing is really the best way to support the channel. It's, of course, free. It literally takes 2 seconds, and it lets the algorithm know that this content matters. And, of course, my commitment to you is going to be that I'm going to continue to bring on great guests, refine those questions. And, of course, I'm always receptive to your feedback. If there's certain people that you'd like to have on, or certain questions, or this, that, and the other that you'd like to have as part of the show going forward, things of that nature, please let me know. I'm pretty easy to access. Anyhow, that's my commitment to you. If you can subscribe, that would mean a lot. Thanks.